friends, welcome to Wise Investor. Today, we are going to dive into Alibaba by looking at strength and weakness of its business and opportunity threats in current market environment to identify our research potential for investment as a wise investor. So, how was it even named Alibaba?
Alibaba? Well, when I started, I think internet is global. We should have a global name. And a name that, interesting, like at that time, the best name is Yahoo. Right, so I've been thinking for many days, suddenly thinking Alibaba is a good name. So I happened to be in San Francisco that day. I did have a lunch, and the waitress came. I asked her, do you know about Alibaba? She said, yes. I said, what is Alibaba? She said, Open Sesame. Good. So I went on the street, asked about 10, 20 people. They all know about Alibaba, 40 Thieves, and Open Sesame. And I think this is a good name. And start with A. Whatever you talk about, Alibaba is always top.
Alibaba was founded in 1999 by a group of 18 people led by Jack Ma in his apartment located in Hangzhou, China. With its first business venture, a global wholesale marketplace called Alibaba.com. In the same year, they also launched similar domestic wholesale marketplace known as 1688.com. And success just has begun. The group then raised $5 million from a group of investors along with another $20 million by SoftBank to expand their operation. In 2003, Alibaba launched another business venture named Taobao, an online retail shopping marketplace to compete against eBay in China, which they successfully did in several years. Soon after, they integrated Taobao with Ali-Wang, similar to messenger application geared toward business-to-server communication, and Alipay, similar to PayPal for payment and escrow services. In 2007, Ali Mama was launched to monetize on Alibaba's platform with ads, similar to Google AdWords and Facebook's Ad Manager. In 2008, Taobao Mall, later known as Tmall, was launched to provide premium shopping experience like Amazon Marketplace from well-established brand and vendors. In 2009, Alibaba Cloud was introduced, which went on to become largest cloud computing provider in China, with growing presence in the world. In 2010, Alibaba launched AliExpress, a global consumer marketplace, by enabling domestic businesses to sell across the border. In 2013, Alibaba, along with other business partners, went on to initiate logistic company named Cainiao, similar to UPS and FedEx. In 2014, Alibaba acquired AutoNavi, later renamed as AMAP, which is currently the leading digital map application in China, similar to Google Map in the US. In the same year, Ant Group was established as the parent company of Alipay, and Alibaba became public on the New York Stock Exchange. It also later became publicly traded on Hong Kong Stock Exchange. In upcoming years, Alibaba had so much success with launching as well as acquiring diverse business ventures to keep expanding its ecosystem for consumer to fulfill its mission to make easy to do business from anywhere by meeting at Alibaba, working at Alibaba, and living at Alibaba. For example, Precipo, a grocery chain with high-tech delivery and pickup option. Sunart, a leading grocery chain in China. DingTalk, a workplace social communication platform similar to Microsoft Teams or Slack with over 100 million users. Flagy, an online travel agency similar to Booking.com. Alimi, an online food ordering and delivery service similar to Grubhub. Idlefish, an online resale platform similar to OfferUp. Kaobai, a classified listing and community website similar to Yelp. Alibaba Health, an online pharmacy store similar to Amazon Pharmacy. Koala Global, a membership-based online shopping website kind of like Amazon Prime or Costco. Lazada, a leading online shopping website for many Southeast Asian countries. Trendyol, a leading online shopping website in Turkey. Youku, an online video streaming platform similar to Hulu or Netflix. Demai, an online ticketing platform in China similar to StubHub. The saying that goes, success is not final and failure is not fatal. It is the courage to continue that counts. In case of Alibaba, after many successful quarters, failure started to happen soon after the famous speech of Jack Ma in the Bund Summit on 24th October 2020, where he criticized the Chinese regulator for doing an awful job at making policies that hinder innovation. The Chinese Communist Party retaliated quickly in response to this criticism with regulatory crackdown on Alibaba along with the entire tech industry by creating more strict rules for the Ant Group along with cancel IPO, removing Jack Ma from public picture, and ongoing anti-monopoly probe against Alibaba with huge fine of $2.8 billion and more regulation to follow. This all political turbulence have cost Alibaba almost $500 billion in market cap, while losing stock price from over $300 to well below $130 as of now. Someone might ask, how do Alibaba currently do its business, and whether it's value or value trap company? Let's first take a look at its revenue stream. Based on their quarterly report, on November 2021, China retail commerce contributes about 65% and cloud computing account for 9% of total revenue, while all the other segments make up 5% or less of total revenue. If you look into history, revenue has been steadily growing with 30 to 50% year-over-year growth. However, due to growing competition and slowing economy in China, management has revised their guideline in last quarterly report to have 20 to 23% year-over-year growth for 2022. Also, income along with free cash flow seems to be turning down regardless of growing revenue, which seems to be a major red flag for this growth investment. Based on past 3 quarterly report, it was mainly due to anti-monopoly fines, increased taxes, and lost investments. If we can just forget about fines and lost investment and focus only on earning, PE at anything below 20 seems attractive when comparing similar business like Amazon, trading at PE of 60. As well as debt to equity ratio at around 0.57 shows their healthy financial condition. And with gross margin at about 39% and operating margin at about 11%, Alibaba seems to have healthy profitability while still being an industry leader. All in all, with growing concern about slow future economic growth, regulatory pressure, and growing competition in China, expansion in cloud computing and international commerce business segment seems a major viable option for high growth in future revenue stream. Now let's do SWOT analysis to see everything in one big picture. If we look at strength, one of the biggest advantage of Alibaba is wide moat, as industry leader with ecosystem of multiple businesses for growing revenue stream. Another positive outlook is substantial strategic investment in cloud computing infrastructure with growing market share for cloud computing in China and in the world, as pressure is mounting for delisting of Chinese stock in the New York Stock Exchange due to ongoing US-China political tension. Having a stock listing on 2 public stock exchange, New York Stock Exchange and Hong Kong Stock Exchange, seems to be one less thing to worry about Alibaba stock for liquidity. If we examine weaknesses, overly dependence on Chinese retail commerce for almost 65% of total revenue leaves Alibaba vulnerable from any Chinese economic catastrophe. Also, deteriorated brand image due to workplace sexual harassment scandal, corruption scandals, monopoly practices could be harmful in long run to perform its business. As for opportunity, Alibaba could start to feel some tailwind of easing monetary policy with some interest rate cuts in China to support economic growth in response to slowing economic condition. On another note, government may start to divert its focus to economic turmoil rather than regulatory crackdown against the tech industry. Also, growth in cloud computing and global commerce business could be a huge opportunity as Alibaba seems to get momentum in those both areas in recent years with 30% year-over-year growth. Now let's discuss threats. Chinese regulatory crackdown makes us all nervous to even think about Alibaba or any Chinese company as an investment. It has been going on for years. With news about new strict regulation and hefty fines against one or more company, which seems to make us nervous and raise pressure on tech sector in China. And being an industry leader, Alibaba seems to be getting a big hit from this crackdown. The US-China political tension is also another headache for Alibaba, as investors fear of Chinese company being delisted in the New York Stock Exchange, as well as applied strict regulation against Chinese company for security concern and fraudulent activity. Also, the slowing economy and growing competition in China appears to be a trouble as market leader. With over-dependence on Chinese economy, Alibaba could lose a lot with losing market share and losing revenue stream. Growing inflation around the world could be another threat for Alibaba as it starts to get momentum in international business venture for revenue stream, where regulators around the world, including the US, are tightening their monetary policies. So, how analysts are rating Alibaba as of now? Even though investors are running away from the majority of Chinese stock, including Alibaba, over the year, mainly due to regulatory crackdown and slowing economy, most analysts have kept their buy rating for Alibaba throughout the year and kept their estimate on average $188, with high as $250 and low as $140. While Alibaba currently trading well below $130, it seems to be perfect opportunity to buy this analyst rating. Finally, let's see who's even buying Alibaba at its current value proposition. There are quite few investors, but one that stands out is Charlie Munger, who is a well-known investing partner of Warren Buffett and has been investing in Alibaba for over a year with almost 27% of his hedge fund portfolio ever since Alibaba started falling down. As Warren Buffett once said, opportunity comes infrequently, where rain gold, put out a bucket, not the thimble. This is exactly what Charlie Munger seems to be doing right now. So, whether Alibaba will return to its glory day as industry leader with multi-leg business venture, only time will tell.
As an entrepreneur, today is very difficult, and tomorrow is even more difficult. But the day after tomorrow is very beautiful. Most people die tomorrow evening. You have to work hard, you have to learn, you have to rely on your team. And that's about business.
I hope I presented all the aspects of Alibaba to help you make wise investment decision. In case if you decide to go with Alibaba to achieve a huge reward with present risk, I would say try to find a balance so that you invest enough to get substantial return, but not as much so that you lose your nice good night's sleep. If you like our video, please don't forget to hit the like button and share with your friends. Also, subscribe to our channel so that you don't miss our upcoming video about such an interesting analysis in the investment community. If you would like us to cover any specific investment opportunities, please share in the comment below. We'd like to hear from you. Thanks for watching.